Hello and welcome into this video. So this is another example of showing more on the strategy in this pair gold. So first of all, we are going to look at or to outline our daily or the weekly fair value gap. So I'll go right into the weekly chart and I'm outlining first the weekly fair value gap. So as I said that the weekly, the gold is mostly a bulls market, a bullish market, but it does not necessarily mean that every trade you enter, it's a must for it to be a bullish trade. What it means is that you have to be in support of the higher time frame PDRAs. So let the higher time frame PDRAs work in your favor. So as we saw from the previous video, if you have listened to it, we saw that there was a lot of consolidation here and we were able to get some setups here which were in line with the dollar index, which, as I said, that if when the dollar is running higher, then gold will be selling, but when the dollar index is moving lower, then the gold will be buying, will be moving higher. So that's the inverse relationship that we want to see. And also another thing to point out is that relationship is backed up by the higher time frame PDRA. So that's when you have that backing, that's when you get these high probability setups from gold. So let's look at the relationship here of what happened when the gold hit this imbalance. So when we hit this imbalance on the 12th of May, in the dollar index, we also obtained the weekly. So even in the weekly, we had a weekly imbalance. So we see right here that we got a bounce of this weekly imbalance and the market has respected this weekly imbalance. So this time that this weekly imbalance was hit is also the time in which gold hits its own weekly imbalance. So this shows that we can use this to favor us. So what we just want to see is is there any form of breaking structure to confirm this analysis both in the dollar and in gold. So also we can fine tune the weekly imbalance to a specific daily imbalance which was hit. We also have that inside the weekly imbalance we have this daily imbalance, and also in the dollar index, the inside that the weekly imbalance we also have a daily imbalance that the market dug into it before reversing. So we see why it shows in the weekly it may seem like a week, like we extended, but in the daily chart it shows the reason as to why we extended to this particular point. It was just to seek this premium array in dollar, and in gold it was to seek this discount array. So from there, since we have done our analysis, then we can go into the 1 hour chart to be able to see if we have any break in market structure in the 1 hour chart. So in the 1 hour chart, this specific daily imbalance, this one, and from there we see that we have a break in market structure right about here. So this is the break in structure. I'll just write it as break in market structure. So when the market broke structure, we saw that this is a very good expansion and this is what we want to see. And immediately the market retraced back. This is a retracement, it's not a reversal. So one thing to note that is that when you see that the market has hit the daily imbalance and it has broken structure, any movement back down to against this order flow, it's just a retracement, not a reversal. So that's what you should have in your mind. Okay, then the market. So we see that if we use our fib tool and anchor from this low to this high, we see that we got a retracement back around more than 50%, and we want to see based on where we are entering. Remember, if we are buying at a discount and selling at a premium. So the market sought premium discount prices. The market sought discount prices, and then we continued high. But another thing I would advise for you is sometimes I avoid trading on Fridays because it's the closing of the week and also the market. So I just don't like torturing myself with having trades at the end of the week or having an open trade at the end of the week during the weekends. So that's what I usually avoid, because I know every week the market will always have a discount array or a premium array or a place in which it will seek before continuing in that new week. So every new week it has its own agenda that the market will create or will continue from since the previous week on Friday. So you just have to understand where we have come off from. So this is our breaking structure, and if I use the fib tool from this low to this high, we see that we hit the 62% level. I don't have the 70%, but I assume that it's here. I think it's here. Yeah. Or if I don't have it, you can just outline it in your charts. But I think this is the 50%, the 62, and the 70.5. So you just have to have that 70.5 area or the 62, because sometimes it may not hit the 70. So that's why I just use the 62%, because it has always the 62% has a high probability of being hit. As I said, I don't like trading on Friday, so I'll not consider this as a setup for myself. And I'll jump into the next week, starting Monday to Tuesday. So on Monday, we opened lower. What we have to seek for is any discount array that we can use. So probably we can use any 4-hour imbalance or a 4-hour imbalance. So let us look at the 4-hour on Monday. So here we have a gap right about here. So remember that gaps have a high probability of being retested. The market will come back into these gaps, but sometimes the gaps may be left open. And we see that on Monday during session, this is not what we want to see. We don't want to see off session or trade off session. So till the next day on Tuesday, Tuesday at 3 a.m. So what I'm looking for is a new breaking structure from this gap. So I'll just show the new breaking structure. So right about here, we have this swing high, but there's also this other swing high. It's just that we don't have an up close candle, but we can use either this swing high or this one, whichever that you are comfortable with, and we wait for a close above the swing high with bodies. So right about here, this is the breaking structure, and also now this is our breaker. So this up close candle is what we call or what we use as our breaker for entry, and we see that it was retested at 9 on Tuesday. So this setup is ideal for us, as it is, as you enter it, you know you are in sync with the higher time frame, since it's a setup that has originated from the weekly chart. Then after that, remember for breaker, the stop loss, the entry is just at the high of this candle. Then you have to add risk, not risk, spread, add your spread, and then stop loss also below this low. And also I prefer to add either 3 to 5 pips for spread. Then targeting, remember we are at a weekly imbalance. So the first target I would like to use would be the previous week's high. You can use the previous week's high like here, and also you can go into the daily chart and look for any daily imbalance. Like here we have this gap, you can use this, or also this imbalance here. So the market will have a potential of running into these imbalances. Yeah, and these are ideal for our entry, our exit, sorry, our exit. So let's go back into the 1 hour chart. So for anyone using the order block or the fair value gap, we see that we have this order block here. We confirm the change in state of delivery. Then we had multiple attempts to retest this order block during 8 and 9 the session. So this is an ideal entry point. Remember, the entry is at the high of this candle, the wick, and the stop loss is at the low of this, the order block. But yeah, I wanted to say that this order block is not so much ideal because it does not have a large body compared to these consecutive candles here. But what I can say, if you are not okay using this candle here, I think we can just fine tune it in the 15 minutes and look for maybe an imbalance as we broke structure here. So let's go into the 15 minutes, and in the 15 minutes we had this candle confirmed as an order block. Yeah, so I think this is also ideal for us to use as an order block, as an entry point. It's an order block, so to use as an entry point compared to that which was in the 1 hour, because I think the body is more, it has a large body compared to even these other ones. Then the stop loss at the low of this candle, the order block, and remember what we just have to wait for is the time session. We have to wait for a specific time session for us to enter. And the reason I've considered also this as my order block is, remember we said that this swing high, which was also in the 1 hour chart, was also our break in market structure. So remember that we broke structure, we left a very clear imbalance here, but the market did not, the market printed this order block, which confirmed the continuation of price to go higher. So the high probability for this imbalance to be retested was very low because we created this order block, and the order block that was also in the 1 hour. So yeah, that's it. Also, if you would have used this as the breaker here, you would have used this up close candle here with the stop loss just below this low, and then entry at the high, and then target will be, I like at least for this model I've tested it to see that it cannot fail to go less than 1:2 risk, your risk to reward ratio. So from 1:2 you can start now taking your partials and taking your profits. Yeah, but for if you want to catch more pips, since we are also in sync with the higher time frame, just use the daily imbalances as I've shown you, and daily highs. Daily highs, because the market will most likely capitalize at these highs. Yeah. So that's it for this lesson, and I wish you all the best.